Welcome to the Retirement's Next Steps podcast. I'm your host, Jill Templeton-Haislip, Global Real Estate Advisor and Senior Real Estate Specialist with Russ Lyon Sotheby's International Realty DeGeorge Partners. This podcast is a valuable resource for retirees looking to connect with industry experts who can enhance your retirement experience. With so many companies, products, and services available, it can be overwhelming to know where to start. Let us help you navigate through it all and find the resources you truly need to make the most of your retirement years. As always, you can join us in person with each of our industry experts for the full presentation every month on the last Thursday at 4 p.m. Our office is located at 16872 East Avenue of the Fountains, Suite 103 in Fountain Hills, Arizona. Thanks for tuning in. Let's get started. Good afternoon, Don. Thank you so much for coming today.
Good to see you.
Good to see you. Don and I have been friends for years.
Pre-COVID.
Yeah, for sure.
Yeah.
So we've known each other for years, so I'm super excited for this podcast today because you have such valuable information to share.
I appreciate that.
But before we get into all of that, Don, tell us a little bit about who you are and how did you get into your field?
Well, my name is Don Rice. Been here in Arizona. I'm in my 32nd year.
Wow.
From New York City originally, and I got into the insurance business, health insurance business years and years and years ago, over 20 years ago. And then back in 2006, they made the biggest change in Medicare.
Okay.
And I was not in the Medicare world at that time, but my mom was, and she was back in New York. So because it was a massive change, and I was already in the insurance industry, I wanted to find out how I could help her.
What a good son you are.
Oh, thank you. Now she calls me every year at the annual enrollment period.
Some people aren't going to change their careers because of, their family member needing something.
Well, it wasn't necessarily a change. I just added a
bullet
bullet to the holster.
You've still a good.
So it turned out after I helped my mom and I realized, learning about Medicare, helping her, I realized it's complicated.
Yeah.
So living here in Arizona, which is beautiful, by the way, I got, there's so many people out here that could use my help that are retirees. So sure. I got all my certifications on top of my normal health insurance, and here I am, 20 years later.
Wow.
Still rocking and rolling.
Seeing lots of changes, I'm sure. Each year adds its own
component. Yeah, and it's, without getting into that conversation, it's not getting any better for the most part, but we just keep in touch and keep up on everything.
Okay. So Medicare kicks in when you're 65.
Mm-hmm.
So what would you say is something that somebody needs to pre-plan for? Do people need to call you when they're 60? Do they call you when they're 64? Tell us, when do we need to start reaching out to you?
For the Medicare side, people should reach out I'd say about 4 to 6 months prior to their 65th birthday month.
Okay.
Medicare starts on the first of the month.
Okay.
So irrelevant when your birthday is, Medicare is always the first of the month. So I will be 65 in May. So May 12th. So any birthday cards, please feel free to send them, gifts, whatever you want. So February 1st, which is just less than 2 weeks away, I have to opt in for my Medicare.
Okay.
Because I'm not collecting Social Security income yet, I have to physically apply for my Medicare.
Okay.
If you're collecting Social Security income, your Medicare ID card will automatically come to you about 90 days prior to your birthday month.
I see.
And that's one less step you have to worry about.
Okay. That's good.
But yeah, and then if you're in an employer group health plan and you're turning 65, there's a couple different scenarios. If you're going to keep or continue working and stay on the employer group health benefits, you really don't have to do anything yet as far as Medicare goes.
I see.
If you're going to come off your employer group health plan at 66, 67, 68, whatever it is, you want to have we want to open the conversation about 90 days prior.
Okay.
Because it's a different process to get their Medicare. So I have all the documentation. It's a Social Security gets involved again. But yeah, those would be the two main times people have to start opening the conversation. Generally speaking, 90 to 120 days prior to whatever date they're going to go onto their Medicare.
Okay. What about for folks who are moving here from out of state that maybe are already on Medicare? At what time would they need to reach out to you? Because, correct me if I'm wrong, but each state maybe differs a little bit in the Medicare coverage?
Correct, depending on what plans they have. So if they know they're moving here in advance, again, about 60, 90 days prior to their new official arrival date.
Okay.
If all of a sudden they move into town and they say, hey, I woke up last night and wanted to move to Arizona, here I am, they can call me that day.
Okay, sounds
But
good.
so there's, depending on the coverages they have, which we'll do a complimentary review, they may have to make a change, or if not, they can stay where they're at, again, depending on coverages. Then they would just call their current carrier and just give them an address change.
I see. Okay. What would you say are the most common Medicare mistakes that people make in general?
Most people are just uneducated on the whole thing. I mean, I'm not a
I think it seems overwhelming for folks, right?
It is. It can be. And again, I'm not a chef. I'm not a CPA, so I would be asking these questions to a CPA. How do I get going? But the biggest mistake that I see is people wait till the last minute, because it is a process. You're dealing with the government. You're dealing with things that take time. So I have people call me 3 days before their birthday, and the first of their month is already gone. So every case is different, but that's probably one of the largest mistakes I see.
Okay.
Is they wait too long.
So you'd rather have people call you maybe a tad bit too early.
Correct. I have people call me a year ahead of time, which I love. Don't get me wrong. I love the proactiveness.
Yeah.
Gives me time to build a relationship with them. I don't know them yet. But yeah, then we can educate them slowly. But I have a method to my madness. I educate. I help them get their Medicare ID cards if they're not automatically enrolled. I show them. I have cookie cutter emails with videos and links on how to get it all done.
Okay. So you always used to be Don who does Medicare, and now you're Don who does Medicare and Social Security. So tell us, what is that component that you added on there?
Well, it's called an RSSA. I'm a registered Social Security analyst.
Okay.
And basically, what that entails is anyone who's turning 62, because Social Security you can opt in from the age of 62 to 70. So whether you're single or married, if you're not sure when to opt in for your Social Security benefits, we can do a complete analysis based on and give them 4 different scenarios on if and when they choose. We can give them a full 20-page detailed report with all these different scenarios. It's really beneficial if you're married and have a spouse, because we're talking survivor benefits, spousal benefits. There's just a lot of information that you can't get from your Social Security statement. I never asked for your Social Security number, I will tell you that right now. But there's a lot of we do a lot of information gathering, and then I have a software program, state of the art, puts everything in there, and it'll print out this report and we go over it. It's amazing software, it really is.
Wow. It sounds overwhelming to somebody who's on the outside, so I think this is an amazing service that you've added on. That's wonderful.
And I have dozens of support members all over that help me that are in the backs, the back scenes, help me out with all these things. But computer technology just really, really helps us with these things. And I mean, we're down to the dollar on figuring these things out. Yeah.
That's great. So a little bit more about Social Security. So when you're talking about claiming decisions, how does that impact a couple's long-term financial security? Because obviously if they're at the point of getting Social Security, they need this to last as long as...
It is a big decision, because once you make it, you're basically locked in. You have a 12-month time frame to cancel your Social Security and go back. But most people don't do that because there's a long story behind that. A lot of people don't realize there's over 2,700 rules and regulations in Social Security.
Oh my word.
The average person, and there's a CBS News, I can't remember the gentleman's name who did it, but they did an article on CBS News. The average person loses about $100,000 over their lifetime by not opting into Social Security at the correct time.
Oh my God.
And that's about
a lot of money.
90% of the population don't have the information on when to claim their Social Security benefits.
So call Don now.
Not now, wait 10 minutes.
If you're anywhere close to turning 62 is what you're telling me.
Yeah, 62 is the earliest you can opt in.
Yeah.
And then 70 is the latest.
Okay. So figure it out.
So you have a 9-year window there total on when to choose. And they have what's called the full retirement age, FRA. If you take your Social Security prior to your full retirement age, you're going to get percentages lower than what you're entitled to. So there's a lot of information, there's a lot of calculations to make sure, and we can predict all those for the future.
Wow, that's really impressive.
And Social Security, it's a guaranteed paycheck for life.
Yeah, absolutely.
So you want to make sure you do it right the first time.
Yeah.
Mm-hmm.
Wow, that's amazing. Thank you for that.
Mm-hmm.
Let's go
You've
back.
got a ways to go, Jill. Don't worry about it.
I do, but it's things that people need to start thinking about now. Not when they're already maybe in the midst of it. You can absolutely help them in the midst of it, but it's good for people to start thinking of these
And
things.
I'm literally personally in the mix of all this because I'm turning 65 in May. My wife and I are having all these conversations.
Yeah.
She's 2 years younger than I am. So yeah, the retirement conversations, the Medicare, pensions, all that stuff. It's all part of our daily conversations.
Daily, he said. Okay, let's switch back over to Medicare. You and I met when I was working in senior living, and there was a very common misconception that folks would come and say, "Oh, my Medicare will cover me living here." Sadly, that is not true for assisted living.
Correct. If it's in the long-term care space.
Right. So tell us a little bit about what does Medicare cover for you in long-term care?
Medicare basically covers nothing in long-term care.
Correct.
Okay, and that's the big misconception.
Yes.
A lot of people think, now granted, hospitalization's covered, skilled nursing facilities are covered, which is rehab.
And I'm glad you said that. So let's talk about what the difference is between, some folks don't know long-term care differences. Independent living, assisted living, memory care, skilled nursing, and rehab. So
Correct.
those are going to be the different options. Go ahead, I'm sorry.
So skilled nursing facilities are covered by Medicare. That's where if you go in to have a surgery, it's rehab, it's rehabilitation.
Yes.
Okay. Long-term care is if you're deemed where you're unable to perform 2 of the 6 activities of daily living.
Yes.
Eating, bathing, grooming, toileting, continence, and transferring.
Yes, and those are the activities of daily living.
Correct.
Yes.
So if it's deemed by your doctor that you cannot perform 2 of those 6, you meet the criteria for long-term care. The question is, do you have protection for that? Long-term care is I'm working with people right now that they know now they've waited too long.
Yeah.
There's obviously any insurance you purchase when it comes to life insurance or things of that nature, long-term care, the younger you are when you purchase it, the less expensive it is.
Yeah.
But there's ways around that as well, and we'll talk about that in a little bit.
Okay. Well, why don't we talk about those? Tell us a little bit, give us a sneak peek. We're not going to give away all of our secrets here because you should be here in person, but why don't you tell us a little bit about some of those now?
Okay, traditional long-term care, which has been around forever, it was like term life insurance. Long-term care, you have a premium. You're basically buying a pool of money, if you will.
Okay.
Or paying premiums on a pool of money. You pay and pay and pay. So many years the premium goes up. You haven't used it yet. You pay and pay and pay.
Right.
Premiums go up. You haven't used it yet. I have clients that call me. They can't afford their long-term care premiums, and when they have to cancel the policy, they have no coverage. So it's use it or lose it with traditional long-term care. Now the insurance companies have caught on to this, and over the past probably 15, 20 years, they've really gotten creative. They have what's called asset-based annuity care, asset-based long-term care,
Okay.
which is a life insurance policy with long-term care benefits built into it. And then there's annuity-based care, which people can actually just, in either case, they can just earmark money they already have, put it into a certain account, and then that money will pay 2 to 4x out if they need long-term care.
Sure.
If they pass away, the beneficiary gets the death benefit, plus a little bit of interest. And if they decide they don't want the care at all 15, 20 years down the road, they just close out the policy and get their money back.
That's huge.
So it's a huge, and a lot of people don't understand that nowadays because they're not educated. They hear their friends that have traditional long-term care and they cancel it because they couldn't afford the premium. So there's just a lot of ways to do it that is affordable, and or just earmarking money you already have. They're not even coming out of pocket, so to speak.
So are those plans that you can assist folks with getting set
Correct.
up on? Okay.
And as an independent insurance agent, I have, like I mentioned, I have dozens of people behind the scenes. So I have different brokerage houses that I work with. We represent probably a total of over 40 different insurance companies.
Wow.
Between Medicare, long-term care, life insurance, and
Yeah.
and annuity-based products, we have access to basically anything and everything.
That's great. when do you want folks to start looking at long-term care insurance? Should the viewers today be reaching out to their grandchildren and saying, get on?
It's funny you mention that because I have a lot of clients right now that the reason they're looking into it is because their grandchildren are starting to take care of them. So the average age people buy long-term care is between 50 and 60.
Okay.
On the average, about 56, 57. But again, working in the Medicare space, everybody I come across is 65.
Yeah.
But still, a lot of these folks don't have it. That's where the asset-based or the annuity-based products really come into play, because annuity-based, there's really no even medical underwriting for that.
Oh.
It's
okay.
just, you're basically just putting it into a product where it earmarks the money for itself.
Okay. Interesting. But you would be able to help folks at any age with long-term.
Correct. If someone called me, if they were 52 years old and were interested in long-term care, we can definitely have a conversation.
Okay. You've talked a little bit about annuities. Let's shift gears a little bit and talk to how will annuities help folks in retirement? What do they need to look at with that?
Annuities, and let me just say this also, everything that I do is about protection and safety and growth.
I love that.
We take all the risks off the table. So no matter what product people use us for retirement, they don't lose any. We're not tied to the stock market, so they're not losing any money. Okay. I still have money in the markets as well, but I'm diversified from that.
Yeah.
But annuities, basically the biggest reason for annuities is to protect and grow their assets they've already earned and built up over the years, to take it out of the market, and they can either set up an annuity for protect it and grow it, and have access to those funds up to a certain amount every year if they need cash. And with that same concept, they can turn it into an income stream. So
That's really important.
they can do a guaranteed income stream for life. I mean, I got very creative with my own personal long-term care annuity. So I took out a long-term care policy and I'm funding it with a guaranteed income annuity. So we can really get creative.
Wow.
And it actually can be fun. Believe it or not, it can be fun.
Only Dawn would say this could be fun. Okay. So as we kind of wind down our time on the podcast, but again, we do have the full presentation happening here soon. And what I love is that Don is local. He is here in Arizona. He can meet with folks, Zoom, in person. I know that you also are licensed in New York.
I'm licensed in 10 states.
Okay.
Arizona, California, Oregon, Washington, Texas, Michigan, Alabama, Ohio, and I may have left one out there, but there's 10.
These the states that you like to vacation. Is that why?
It's funny you asked that question, because I've had clients that would get up and move and relocate, and they said, you're not going to be my agent anymore. I said, well, I can get my license, so I'll follow you can't get rid of
That
me.
is a true dedicated
So I will get
person.
licensed in that state so I can still work with them now and in the future.
I think that's amazing. And I think this plays into my next question, which is as Medicare time comes up, November.
Oh, the annual enrollment period?
Annual enrollment.
Yeah, October 15th through December 7th.
Okay. When that time's coming up, we see nonstop commercials. Give us a call. We can help you with all of your Medicare needs. I think it's extremely important for folks to know that you are here year-round to help them, and you are in person, and it's such a better experience than calling one of those numbers.
Thank you for bringing that up, because I finish every phone call with my clients. Always call me first with a question. Don't call the TV ads.
Yes.
Don't answer the text messages. Don't answer the emails. You have a question, you call me first. And unfortunately, they end up calling the TV ads.
Oh, no.
And then they end up getting put on another plan without even knowing it.
Okay.
Then they call me up and say, Don, I went to the doctor to use my insurance. They said they don't take my plan anymore. They canceled my insurance. And I'm like, did you talk to anybody? And so...
Oh my gosh, that's so dangerous.
And trust me, there's legislation out there. There's all types of things. It's really bad.
Wow.
So always call your agent with a Medicare question first, or call me. It's right now we're in the Medicare Advantage open enrollment period.
Okay.
So from January 1st to March 31st, if anyone is on a Medicare Advantage plan right now, they have two options. They could either go back to original Medicare and a drug plan, or make one last change to a different Medicare Advantage plan in this time frame. But those are the only two things they can do. And if they make that change now, then they're locked into that for the rest of the year until October rolls around, they can make a change again.
This is all very confusing.
There's AEP, OEP, IEP, SEP, MAPD, OEP. A lot of P's.
At some point, he's just throwing around letters with a P there.
Those are all legitimate enrollment periods.
No, but I think you are very, very knowledgeable about all of this. And I think it's important, even though people watching this, myself included, are confused by some of what you're saying, you are an expert in this. And it's so much better to not go with this alone. Contact you who can help walk people through it. And you almost do a deep dive, is that an okay word to use, into what they currently have or what they need to be doing?
Willing to, depending on what their questions are, depending on what they want. If they want to shop their plan, then yeah, there's if they're not my client, I have to get a lot of information. If they're already my client, I have the majority of what I need. Then it's just kind of, okay, what are you looking for? Why are you now not happy where you're at, or why are you looking for the greener side of the fence? So yeah.
Okay.
But we always do a full assessment.
Perfect. What is the best way for folks to get in touch with you?
My office phone number is 480-551-7303. You can text me at 602-312-7661.
Okay.
My website is azinsuranceguide.com. And my email is donrice@azinsuranceguide.com.
Perfect. And in case if you missed any of that, you can absolutely reach out. But is there any other last little tips that you want to share with folks just to make sure they're doing things?
Call Jill first,
Okay.
and then she'll relay the message. No, I'm just
Absolutely.
No, Jill, thank you so much for having me on here. It's always fun to see. It's a good time.
Absolutely.
So thanks again.
And it's great information. So thank you, everybody. Thank you, Don.
Thank you so much.
Stay tuned for more.
Have a great day, everybody.
Thank you for listening to another episode of the Retirement's Next Steps podcast. If you have any questions, please don't hesitate to reach me at 303-204-4432 or via email jill@dgeorgepartners.com. If you would like to attend one of our Retirement's Next Steps workshops, you can find the schedule on our website, Templeton-Haislip.com. Make sure to subscribe to Realtor Jill Templeton-Haislip on YouTube and follow the Retirement's Next Steps channel. You can also follow us on Facebook and LinkedIn. Wishing you a happy and fulfilling retirement. We look forward to connecting with you soon.